Were you an A, B, C, or F student in high school? What about college? What about real life? Wait. Vivian, we don't get grades as adults. I hate to break this to you, but you do. They're just called credit scores. Wait, what? A credit score is essentially a number from 300 to 850 that rates a consumer's credit worthiness, aka how likely you are to pay back debt score. The higher the credit score, the better a borrower looks to potential lenders. And I know you probably have some questions now, like how does a credit score work? What factors go into what number you get as a grade? What's a good score? How can you get the best score possible? Fortunately for you, I'm Vivian, your Rich BFF, and your favorite Wall Street girly, and I'm gonna teach you all of that in the next 5 minutes. Please like, comment, and subscribe to learn more about being good with your money. Let's get to it. Where do credit scores come from? Credit scores aren't this old financial thing that's been used for centuries. In fact, it wasn't until 1956 when engineer Bill Fair teamed up with mathematician Earl Isaac to create Fair, Isaac & Company that standardized credit scoring became a thing. And the system we know and use today wasn't even invented until 1989. I was also invented around 1989. Now, there are 3 major credit bureaus: Equifax, Experian, and TransUnion. They dominate the market for collecting, analyzing, and providing lenders information about consumer credit. Each credit bureau gives you their own credit score, so you actually have multiple credit scores, but generally they'll be relatively similar across the 3. What makes up a credit score? A credit score is made up of 5 major factors. First, payment history. Payment history counts for 35% of a credit score, the biggest category, so you're gonna wanna get this one right. Up next, total amount owed. Total amount owed accounts for 30% of your score, and it's based on the percentage of credit available to you versus the amount being used, aka credit utilization. Third up is length of credit history. This is pretty self-explanatory and it accounts for 15% of your credit score. Basically, the longer your credit history is, the less risky you're considered as there's more data to show your payment history. Essentially, time vouches for you. 4, different types of credit. Types of credit account for 10% of your credit score. There are different types of credit like installment, think your mortgage or your car loan, revolving, your credit card, and open credit. Think a charge card like the Amex Platinum, where you need to pay the full balance each month. Lenders like to see a blend of the 3 if possible to show that regardless of the type of debt, you'll pay it back. 5, lastly, new credit. New credit accounts for 10% of your credit score, and it factors in how many new accounts a person has recently opened. This is also known as the number of recent credit inquiries or hard pulls on your credit. Now that you know what goes into a credit score, what's a good credit score? So we all know credit scores range from 300 to 850, but what are the actual A, B, C, D, E, and F breakdowns? Each lender will have their own scoring system. But for the most part, credit scores can be broken out as follows. 800 to 850 is excellent, 740 to 799 is very good, 670 to 739 is good, 580 to 669 is fair, and 300 to 579 is pretty poor. By having a score in the very good or excellent category, you'll likely be getting the best terms on any money you may need to borrow, mainly for bigger ticket items like a home, car, or small business loans. So how can you improve your credit score? Now that we've covered what credit scores are and what you should be aiming for, here are 3 easy tips to raise your credit score. First and foremost, easy one, pay your bills on time. Don't miss payments and be consistent. That's a quick and easy win. 2, keep your credit utilization under 10%. A secret rule that most folks don't know is that if you spend over 30% of your credit line, you'll ding your credit score. So for example, if you have a credit card with a $10,000 limit, if you spend more than $3,000 on your card, you'll likely cause negative strain on your credit score. However, if you can keep use below $1,000 on the card, odds are good you'll see upward movement in your credit score. My big tip, call your credit card company and ask for a credit limit increase every 6 to 12 months. This is my favorite trick in the book because it's a basic math percentage. If you ask for a credit limit increase and your credit line gets bigger, but you don't spend any more, that means the percentage of your credit limit that you're using goes down. And last but not least, do not close your oldest line of credit. I made this massive mistake when I was 23. I had my fancy Wall Street job and I was able to get a way cooler, way fancier credit card with better perks. So I closed my old dinky credit card and guess what? My credit score dropped 60 points. That's bad. Do not make the same mistake I made. Either upgrade or downgrade your oldest credit card if you want to close it, but never actually close that line of credit. Alternatively, you could also just put a small recurring charge on it each month. Think something like your Netflix subscription, and then just set the card on auto pay. And now I'm curious, what's your credit score? I hope this info helped to demystify credit scores just a little, and that the suggestions help you make some small changes to improve your own personal score. Make sure to like and subscribe for more money, budgeting, and finance tips. See you later, besties.